Our guest today is Edmund A. Mennis of Los Angeles, who is a consultant in the security investment field. And we will be talking today about the careers and the activities in the security investments industry and what the opportunities are for discussing this area of activity. Edmund A. Mennis is a graduate of Columbia University with a PhD from that institution. He has served in various locations in the security investments field all in his career, 40 years in this industry. He was with the Wellington Fund very early in his career, which was followed by a short 6 years in the Republic National Bank in Dallas, Texas, after which he went to the Security Pacific Bank in Los Angeles, where he was there for some 12 years and at that time established and set up a security investment management operation, a subsidiary of that institution, where he was the chief executive officer of the operation. Ed, we have been talking with the idea of sharing with our audience the things that they should be thinking about in the interest of entering the field of securities and security investments. With your long experience in this activity, I'm sure you found what the needs and the wants of this industry would be with respect to new entries into the profession. Have you some ideas that you could share with the audience?
Yes, I think so. One of the things that I think is characteristic of the industry now, and one of the things I don't particularly like, is the tremendous short-term orientation we see in investments. Because most people going into the investment field now will be working for organizations which are investing money that has a relatively long time horizon. And you can't invest this on what's going to happen to the market next week or next month. Now, to be able to succeed in this kind of an activity, I think that an investment person must have a fairly long perspective on what's been going on. And consequently, it would seem to me that a student who hopes to go in here should get themselves pretty well grounded in the fundamentals of economics and finance. They need a good accounting background, certainly, but the historical perspective of what's happened over various business cycles. What has the path of prices been? What are the leading indicators, the coincident lagging indicators done? What has been the path of GNP? Not just over the last quarter or 2 quarters or a guess at the next quarter, but let's say take it back to the period since World War II and get some sense of time, because if you are investing large sums of money, that's the time over which you should be looking to make your investment decisions. Another thing I certainly think students should have is the ability to write and to communicate orally. You can have the best investment ideas in the world, but if you can't get those across to the people who are ultimately going to make the decisions, you're never going to get to be a decision maker yourself. These stages of the game, you find the investment field is getting terribly quantitative. I don't think it's necessary to urge that any MBA student be familiar with and not afraid of a computer and be fairly familiar with quantitative techniques. The one caveat I would insert in there is to remember when you're becoming skillful in quantitative techniques that the computer doesn't think for you. You have to know something so that what you put in turns out to make good decisions for you. One of my favorite stories, about 6 months ago I was doing some research and working with a professor at a university that shall remain nameless. And what I was trying to do was to investigate the relationship between corporate profits as reported by the Department of Commerce in the national income accounts and the Standard & Poor's earnings per share on their 500 stock index. Basically, the difference between profits in the national income accounts and profits in the S&P 500, which are shareholder reported based. Well, we went in and we took a look at the relationship between these two, running a correlation from the period of, let's say, 1945, 1950 to date. And the amusing thing was that this young man was working on the computer, and as he ran the correlations, they'd be spun off on the computer and immediately plotted on another screen next to him. Well, I can remember when you and I started doing this quantitative stuff, to do a correlation with a hand calculator took hours, and this thing was done in seconds. And the thing that happened was that as he plotted the regression equation, which turned out to be a very, 0.95 or something like that, the relationship between the two, as he plotted the two, it worked out beautifully except for the past couple of 3 years, in which case the relationship just went berserk. And he got really upset about it, and what he did was he'd run it again and run it again. He'd try first differences, second differences, all kinds of different approaches to see if he couldn't make those relationships perform properly. And they couldn't. And he finally turned to me in exasperation and said, "I don't know what to do." And I said, "Well, what's the problem?" He said, "Well, I can't make those things relate toward the last end of the period." And I said, "Well, gee, that's okay. That's no problem. That's what we're trying to demonstrate, that these have had a very close relationship, but because the Commerce Department profits are beginning to acknowledge the tremendous increase in depreciation, which are taken on income tax returns, and this depreciation is not shown in shareholder reports, they should misbehave at the end, because that's what's happening out there in the real world." And he turned to me and he said, "I'm pretty good at this quantitative stuff, but it's good to talk to someone who once in a while knows what's going on."
So sticking to the fundamentals.
That's the idea. Getting to know what's going on is one of the tricks. One of the other things I would certainly urge on your students in the aiming in the financial area is to become familiar with and hopefully enroll in the Chartered Financial Analyst program. That's the program of the Institute of Chartered Financial Analysts. It's run out of the University of Virginia in Charlottesville. It's been going on for 25 years now. The advantage of it is that at the end of 3 examinations spread out over a 5-year period, these are 3 all-day exams, and the subscribing to the Code of Ethics of the Institute, the person gets a designation CFA, Chartered Financial Analyst. And that is more and more becoming the hallmark of a professional analyst. We have, 8,000 or 9,000 of them now in the country as a whole. As a matter of fact, we have many of them overseas. And becoming a member of the financial analyst societies in the various cities requires a passing of the first CFA exam. Now, this exam can be taken as soon as a student completes his MBA program. And as a matter of fact, I'd strongly recommend it because the first exam is really based on the tools and techniques that you would learn in a good MBA program such as you have here. And then, of course, the second and third exams are given after a certain number of years' experience and are also passed more by the things that you learn on the job than by something you can learn out of books. But that
in the latter 2 exams,
the latter 2 exams
more and
more draw on your day-to-day experience as a financial analyst. So I think that this is something that more and more is going to become required for financial analysis and something that students could start right off the beginning.
Is it becoming a prerequisite for hiring?
In many, many cases.
It is.
Not only in companies, but also in investment management organizations. And if you look at the ads in the Wall Street Journal, you'll see the designation CFA after the names of people, which indicates that they've gone through that exam program.
Is there a distinction now between what they will receive as a starting salary and that person that has a CFA versus the one that does not?
It's pretty difficult to get the CFA if you're just a beginning person because to take the second and third exams, you have to have experience requirements.
Yes.
But I would say that having that designation in many instances does make a difference in the salary progression as you move along.
What was we faculty, how could we encourage and be more active in the participation of the development of students for this program?
One of the things that you might consider is that your local society, I guess, what is the local one?
The Indianapolis Society of Financial Analysts.
I don't know whether they have a formal study program, but many I know in Los Angeles, in New York, and in Boston, they have formal study programs usually associated with one of the local universities. So you certainly could offer that kind of a study program for students in the CFAs that would be in the Muncie area.
That's a good suggestion.
One of the other final comments about what a student should have as a background, I just pass on the idea that in my 40 years in the business, just about everything I ever did, some way or another, fits into what you do as a financial analyst. You're finding that it's not a very minor job in a small area. You're not in charge of accounts receivable from A to D. You are taking pretty broad views of the economy, of industries. You're getting to see a lot of companies that do a lot of different things. And just about all of your adult experiences and many of your teenage experiences can fit into that and make you a more useful analyst. So.
Well, the analytical field is one that we both have been sharing, and we've had diverse interests and diverse experiences in this area. The institutions that you felt gave you the most contribution for basics and ideas, were there any differences in these institutions?
Well, they all helped. Looking back on my career, I would say that one of the most broadening experiences is something for someone who was just beginning to look for jobs might consider, would be to consider working in a bank trust department. I don't know of any other institution where you have such a wide array of portfolioed investment challenges and where you are exposed to just about all of the facets of investment. As I look back, I started out my career essentially working for the Wellington Fund in Philadelphia, as you mentioned. And there we were working with one fund which had one portfolio objective. And you didn't pay much attention to the broad spectrum of investment problems that you get as you would in a bank trust department. There are other areas, insurance companies, for example, particularly those that have set up separate accounts for pension fund management. That's another interesting area. Investment management firms, those either that are independent of banks or subsidiaries of banks like the one I work for. Other areas of opportunity. Consulting firms that either select managers or evaluate managers or make performance comparisons to help companies that are running pension plans. And there's one other field that I commend that your students consider, and that is working for industrial or other companies that have their own pension plans. As these plans have grown, they have become an extremely important part of a corporation. I mean, some cases the pension plan's assets are bigger than the biggest division of the company, or the contributions are 15 to 20% of pre-tax net profits. So consequently, that gets senior management attention and is becoming a full-time responsibility for a certain staff section. And in many larger companies, this can become a career path in itself.
In these companies, do these individuals actively participate in the detailed selection of assets?
Oh, yeah. Now, well,
it's not just the policies, it's just more than...
They set the policies. Now, there are in some companies where parts of the fund are run internally. In some companies, like General Electric, the entire pension fund is run internally. But they're more on a policy level advising the senior committee of directors and officers that manage the fund.
I see.
And they get involved in the manager selection process, the performance measurement process, and in some instances they also run money in-house. So it can be a very broadening experience, and it has the significant advantage of being highly visible to senior management.
In the entry into the pension operations and the investment decision-making of pensions, does this diverse interest that you mentioned in trust areas of banks give them the broad base for fundamental understanding of investment decision policies?
I would think more so than working in a relatively narrow area. One of the things that's happening in the investment management field now is a tremendous increase in specialization. So you have investment management firms that only manage equities, in many instances only manage them in a particular way. Other funds that manage bonds and only manage them in a particular way. Consequently, you, again, as I said, you get a very narrow focus. Whereas if you wanted to, and if you enjoy, as I guess you can see I do, getting a broader perspective and a more overall view, beginning with a bank and getting into a company, or getting in some place where you're not down to a very, very tiny little area, can be, I think, a great deal more rewarding.
Many of us get the impression that specialists, however, are the best paid. Is that a wrong impression?
No, you're probably right. I'm assuming here that the objectives, at least at this stage of a student development, is perhaps a bit more idealistic and a bit broader, and he's more interested in the challenge and the fun of the game than how much money he wants to make. I suspect if he said, the main thing I want to do is to be a millionaire at age 30, I'd have different kind of advice for him.
Well, would you say that the broad-based understandings, however, give support to the specialist and make him a more capable specialist?
Oh, yes, yes.
And what are the specialists that you would cite as being directions that...
well,
the bond man versus the stock?
Yeah, well, not only that, but in particular kinds of bond management. A lot of the bond management areas now are highly specialized, very quantitatively oriented. One of the areas that's extraordinarily well paid is the trading area. some of the quantitative techniques that have been worked out for program trading, and also just people who are just plain stock traders.
Well, is there a change, or is there a difference between the trader and, say, the portfolio manager?
In some instances, and not too many, the portfolio manager and the trader are the same guy. In other words, he executes his own trades. But in most organizations, you'll find that the trader is a very specialized person who is in minute-to-minute touch with the market all day long. And when you're dealing with large quantities of orders, you're not dealing with 100 shares, but you're dealing with 100,000 or 200,000 shares, where A, that much can have a significant impact on the price of a stock, and B, you can't execute all those orders, let's say, on the New York Stock Exchange. You do it on the regionals and over-the-counter in a whole bunch of different ways. This is a very highly skilled operation, one extraordinarily well paid, and I might add one where the person usually experiences burnout around 35. This is a game for young people, not old people.
Well, you were mentioning now a moment ago that the minute-to-minute trading would not seem to be consistent with a longer-term view. Is there a distinction then, perhaps?
Oh, yeah. No. What I'm saying is that the portfolio manager hopefully has a long view to make the investment decision.
Yes.
But in the execution of that decision, he wants that done effectively and efficiently, and he doesn't want the market to be disturbed too much by a large order. And that's where the trader comes in. In other words, his job is to implement the decisions of the portfolio manager, not to supplant him with the view. A good trader's idea of long term is today. In the short term is the next 5 minutes. Portfolio managers hopefully can look in a 3 to 5 year time horizon. But it's the trader's idea, if a manager decides that he wants to put 100,000 shares of XYZ stock on the books around 32, he doesn't want to wind up buying the last 1,000 shares at 37. That's the difference.
Well, in the decisions for making the investment choices and the selections is a very challenging opportunity for in today's markets, and it's very attractive from that point of view. But as you mentioned, it is taking place in a very narrow framework of just next week and not very far out.
That's true.
That would seem to be the places where the attraction and the challenges to the young people would be seemingly the greatest. And yet, where are the opportunities that are being offered for the investment-oriented or investment career-minded person? Where are these opportunities?
You mean the beginning opportunities of kinds of companies?
And extending on. What should they be looking for even in the long term, thinking in the long-term view?
Well, thinking in the long term, I suspect the most interesting and rewarding, and indeed the most well-rewarded, would be for in the investment management companies that manage large pools of money. I think that the banks and the insurance companies are becoming competitive in salaries and opportunities now, particularly with the creation of independent subsidiaries, such as the one that I managed at Security Pacific Bank. It was a subsidiary of the bank and was completely divorced from the bank, my own company. There the opportunities are great and, as a matter of fact, fully competitive with investment management firms. There are other areas, but in performance measurement firms and in consulting firms and so forth. But I think in terms of the financial rewards and opportunities, those smaller investment management companies are probably the most attractive at the present time. There are other opportunities in some of the major brokerage firms. For example, ones which are pushing advances in quantitative techniques like Salomon Brothers, Goldman Sachs. You're going to find there that they're doing a great deal not only in day-to-day trading, but actually on the leading edge of the art and science of investment. Both of them have made significant steps recently in hiring a heck of a lot of PhD academics to come in and work full-time for them in the creation of new investment vehicles and, if you will, the advancing of investment management.
What do those people bring with them, the academics and the PhD people that come to the security house?
It's the application of, if you will, what's on the leading edge of investment theory to the day-to-day operations of large pension funds, large sums of money.
And that,
doing it very
that doesn't
successfully.
prove rather difficult for some academics to make that transition? That seems to be
Yeah,
a very startling thing.
but on the other hand, I think it's presented a few interesting challenges for the brokerage firms to absorb this kind of thing. But I would say that the transition seems to have gone quite well in most instances that I'm familiar with.
Well, the career development, is there a difference in terms of early stages of the career that you would encourage certain areas of interest?
Yeah, I would say this, that things have changed a bit in the 40 years. I can remember when I started out in the business, an incoming analyst wasn't permitted to progress very quickly. He was expected to do daily pricing and a lot of other, if you will, mundane activities. But you got to remember, back then we used slide rules instead of computers. I would say that that time span has shortened. We found first that the training of the students, you know, a student coming out of a good school now with an MBA has had far more background and experience and knowledge of the field of investments than we ever got when we took MBAs back 30 years ago.
Yes.
So they come back better trained, and consequently their progression is a lot more rapid. And it's not surprising to find people with 3 to 5 years experience, given a good solid academic background, getting into fairly significant positions of responsibility in investment management firms.
Well, you've been mentioning all through here now MBAs.
Yes.
Does that preclude the opportunities for graduating seniors from the undergraduate school for entering the field?
Well, I hate to be discouraging, John, but to be very candid about it, there are a lot of MBAs out there, and it is not surprising to find that employers can say, if I can get an MBA who has a lot of qualifications, and usually in instances some job experience, it's a heck of a lot better for me to take in that person. He can move ahead more rapidly and begin to earn what I'm paying him than getting just an undergraduate student who may be majored in finance. I don't mean there are no job opportunities, but they are at a, if you will, a lower level, and the progression is much, much slower. So I would say that a good undergraduate student who wants to go ahead can find a job in the field, but the thing he should remember is that he should go back and get that graduate degree as soon as he can. Many employers, like our own bank, for example, would have programs where you permit the student to study in the evenings and even pay for his tuition, that kind of thing. So I would say that, yes, there are places, but I think it's a little bit more difficult, and you should not give up the idea that you want to get ahead and get that graduate degree.
For his advancement in his career, then, an MBA is almost essential to
Pretty much in the field of finance now, yes.
And the programs for the undergraduate, what are the areas of interest that they should pursue in their preparation for? In the MBA, we think of it as pretty much a general area of disciplines that they are not so much specializations and majors.
You mean they have more specialization at the undergraduate level?
Would you encourage that?
I suspect I might like to have it the other way around.
I see.
The undergraduate to get the broad perspective.
General.
Yeah, and you know, not too specialized. There's nothing wrong at the undergraduate level with getting exposed to a bit of English and a bit of history and some of the other social sciences.
Certainly the communication you mentioned a moment ago.
And then in the MBA program to get more involved in the specialty areas, finance and economics and accounting and so forth.
Now, you have mentioned to me before that something about the difference of an MBA program in your California schools, and we perhaps have been exposed to here, in which many of your MBAs have experienced and much experience while they were getting their MBA.
Yeah. Well, there are two things. One is in many of the colleges in California, or the universities rather, I mean Stanford, UCLA, for example, you'll find that the incoming students have had 5 and 6 years of work experience, and therefore they bring not only the maturity of being somewhat older, but the maturity of actually working on a job to the MBA program.
In
and
their
consequently,
field?
they make out a heck of a lot better. They also come to it with diverse backgrounds. One example I can give is my son, who was an undergraduate engineer. He got an engineering degree from Duke University and no business programs at all, and who went into UCLA to get his MBA and found that the combination of the two has provided a very solid underpinning for the work he's now doing as a computer engineer.
Well, in the wind-up of our story today, is it, would you have suggestions for going about seeking a job for students, MBAs and undergraduates perhaps?
Yeah, I might offer a few. I don't know whether it's the kinds of things that your people are used to hearing, but let me take a shot at it.
What do you look for in a candidate?
Well, the first thing I look for is how the candidate approaches me to begin with.
It isn't his grade scores or his...
No. I get a little discouraged by the students who are primarily interested in interviewing the companies that come on the campus. Let me give you an illustration. The kind of a person that always got an interview when I was hiring people, and Lord knows I got resumes all the time, particularly around graduation time. But the kind of a person that I tried to see was someone who didn't just send me the form letter to the head of Security Pacific Investment Managers, misspelling the name, and saying attached is my resume, which was kind of printed, and you figured that 150 of those went out, and 150 people got them. The one that I was interested in was the one who had taken the trouble to send me a letter with my name on it, with the name of the company spelled directly and correctly, and saying, I would be very interested in working with your company. I think I have the background and the maturity and the experience to do it. I've looked into it. You have an outstanding record, and I think that I could really have a happy career working for you. I will call you next week to set up time for an interview.
In terms of his looking into it, how much in depth could you vision how much in depth he had gone to examine?
He took the trouble to get my name and the name of the company right, and he took the trouble to write me a personal letter and say I'd rather work for you than anyone else in the world. Now, he may have sent 150 other letters to 150 other people, but nevertheless he took that much time and trouble to indicate that he was really interested in what we had to offer. Now, after that, and that person gets the interview, after that, the things I would look at would be first, what experience other than the educational process did you have? And then in the educational process, not so much what your grade point average was, but what kinds of courses did you take? What kind of texts did you use? What kind of teachers did you have? What did you learn? I think that far too much emphasis is on this, where do you stand in the hierarchy of grade points, and not enough emphasis is placed on what the heck did you learn in school, and what can you bring to the job, because after you've been with the job for a while, it's going to be what you do on the job, not your grade point average, is going to determine how you make out.
And in the MBA program, were there specializations in the area of the MBA that were especially suitable for getting started?
Well, again, the ones that I mentioned at the outset, the finance courses and the accounting courses. But still, I get back to what I said at the very beginning, John. It's extremely important from my point of view that someone have a broad perspective. I don't like the specialist in the little areas. I'm looking for someone that has some kind of an overview. And if you can bring that in with a good, solid quantitative background that you know how to use, in my opinion, you can be a very, very valuable candidate for a job, at least for any company that I head up.
And as you mentioned, writing skills was one of those important
skills.
Bet.
You bet. The lack of writing skills, I'm sorry to say, is one of the sorriest things that we can say about our current crop of graduates. And,
you're an editor of many publications.
Yeah.
Do you find trouble with the manuscripts when you receive them?
Yes. and I'm sorry to say that we get many manuscripts from people with advanced degrees who should be able to write better. And you wonder how they ever got through writing a doctoral dissertation when you see some of the things that they submit for publication.
Well, Ed, we most appreciate your taking the time to visit with us today. And we find we're winding our story down at this point. That have you any last points of view that you'd like to express?
Well, nothing on the subjects we've been talking about, but just to express my appreciation for my first opportunity to get to this part of the country and to visit this university and to be made felt very warm and very welcome. I really appreciate it.
We hope we can encourage you to come back.
Thank you so much, John.
Thank you, Ed.